Do you have any idea what is the maximum limit of cash transactions that an individual or a business person can do as per the prevailing provisions of Income Tax Act? These limits are clearly defined in different sections of Income Tax Act 1961. By limiting these cash transactions, which unfortunately are not recorded anywhere, the government wants to curb black money. Also, they wanted to promote or encourage digital modes of money transaction. Let us examine the different sections under Income Tax Act 1961 which limits the cash transactions one by one. The first section that we are going to discuss here is section 269 SS. As per this section, the maximum amount of cash that a person can receive as a loan or deposit is limited to rupees 20,000. But you can do other modes of transactions. You can receive cash through your account, maybe through your bank, demand draft, or UPI transaction, or other electronic modes of transactions, or maybe net banking and all. It is possible. All other modes of transactions possible. But only issue is that you cannot receive a loan or deposit of more than 20,000 rupees in cash. This section is applicable to loans taken in installments too. If you try to take a loan of 1 lakh in 5 equal installment of 20,000, it is not valid. Any loan over 20,000 through cash payment is not allowed. If you violate this rule, all the amount over and above this 20,000 will be taken back as penalty. This is applicable to loan repayment also as per section 269T. An Indian resident can take a loan from an non-resident Indian or from a person of Indian origin, PIO. An Indian resident can give a maximum loan of 250,000 USD, American dollar. That's about 2.25 crores to a friend or a relative interest free for a minimum period of 1 year. These are controlled by FEMA, that is Foreign Exchange Management Act, and RBI regulations. As per this, if an NRI or PIO gives loan to a resident relative, then a maximum of 250,000 USD only can be given in one financial year as per LRS, that is liberalized remittance scheme. Okay, as per the liberalized remittance scheme, that is LRS, maximum of $250,000 only can be taken as a loan or can be given as a loan. But in case a resident Indian is taking a loan from a relative or from a non-resident Indian, then that amount should come through his NRI account or FCNR account. So it should come through NRI or FCNR account. The next section that we are going to discuss here is section 269 ST. As per this section, an individual or a business person can accept a maximum of only 2 lakhs rupees per day per event from one person. This is applicable for sale of goods or services. This can be a sale of property or maybe a vehicle, or it can be a loan repayment, or for payment to an event management company, for example for a marriage. But there are exceptions for government banks, cooperative banks, maybe post office deposits, then savings, post office savings banks. Then for all these sections and all, they can do this transaction. More than 2 lakhs can be done for the internal movement of cash. Internal transactions is possible for more than 2 lakhs for these departments and banks and financial institutions. Now we have to be careful that more than 2 lakhs rupees will not be deposited in your bank account in cash in one day by one person for one particular event. Then naturally a doubt may come up in our mind regarding the UPI or e-wallet payments. UPI means Unified Payment Interface. This is introduced to promote cashless economy. UPI payments up to rupees 50,000 is exempted from income tax. Above 50,000 it will be considered as gift, and provisions under the head income from other sources, IFOS, will be applicable here. But if it is a repayment, this is not applicable. But if you are getting rupees 5,000 or more from your employer through UPI payment, it will be considered as gift, and the provisions under income from the sources will be applicable here also. And the head chargeable is actually section 3 subsection 7 clause 4. Be careful about the cashbacks and gift coupons that you receive by these UPI apps like Google Pay and then Phone Pay and all. If this kind of vouchers, cashbacks and all exceeds 50,000 rupees per year, then it will be considered as gift. The same is applicable if you get some if you receive some gift from your relatives or friends also. And for marriage also, if you're getting some gift, and if its value exceeds rupees 50,000, then that is considered as gift. When we say there's a limit of rupees 2 lakhs, this limit is for per day, per person, per event. So even when some amount is paid in different days, but it is for the single event, then the limit 2 lakhs is valid. For example, you are selling your property for 20 lakhs. So what do you think actually 20 lakhs is there? Then per day 2 lakhs, then 10 days 2 lakhs each. You can get payments, you can receive payment 2 lakhs each. Then it is not taxable. That is not correct, because it is a single event. The event is actually selling your property. Therefore, up to 2 lakhs only you can receive in cash. Maybe the advance 2 lakhs you can receive in cash, and the balance 18 lakhs you have to get through accounts, bank account and all. If you are not done, then whatever excess amount you are taking, that will be taken by the income tax department as the penalty. The whole 18 lakhs will be lost. We just take the case of jewelry shops and all. If you go and buy some jewelry from the shop, then they will give you maximum of they will take a maximum of 2 lakhs only from you as cash, not more than that. From one person, maximum 2 lakhs only will be taken in one day. Okay, if you have 2-3 persons are there, then you can divide it into different person's name, then it is okay. Otherwise, they will not accept the cash from one person. More than 2 lakhs, they will not accept from you. How will we avoid penalty in such cases? So we have to ensure that you will not receive more than 2 lakhs per person per day for an event. So better you should not take more than 2 lakhs rupees in cash from one person. This is the best way to avoid this. Now try to use maximum this transactions. You try to use actually bank account or maybe UPI or RTGS, NEFT, net banking, etc. you use. But you have to keep proper documentation of all these financial transactions. For larger amount, always use account pay transactions and be very careful on this, so that we will avoid cash transactions above 2 lakhs. You have to be very careful in this case. The next section that we are going to discuss here is section 40A subsection 3. This section is about expenses incurred by businessmen or professionals. For them, the tax is calculated after deducting the expenses from the income. That is, tax is calculated for the profit or gain. So for that, what we will do, from the income, expenses are deducted. Then we will get the profit or gain, whatever, and on that only the taxes are calculated under the head PGBP. That is, profit and gain from business and profession. Any expenses in cash above rupees 10,000 will not be allowed as expense and thus cannot be deducted from the income to calculate the profit or gain. This means that the income will increase and the business person has to pay more taxes on this at the prevailing tax rates. Since that expense is not allowed or disallowed, what will happen? Naturally, the income will increase. So he has to pay additional taxes on the increased income. Another section that we have to consider for businessmen is section 43.1. This is talking about depreciation. So, the deduction of depreciation for fixed assets, the businessman will not get if they pay more than 10,000 rupees in cash for fixed asset. That means that whatever we pay in cash, that amount will be deducted from the cost of the fixed asset. When that amount is deducted from the cost, what will happen? The cost of the machinery or the fixed asset will be shown as a lesser amount in the books, in the books of account. Then, since that depreciation is calculated on some percentage on the cost or WDV, mean written down value. Written down value means actually the cost minus the aggregate depreciations. So whatever amount we are getting from on that some percentage is applied to that. That's the depreciation is calculated, and this depreciation is considered as an expense. So this can be deducted from the income. So his tax liability will be reduced. If he has paid for this capital asset in cash more than 10,000, then that amount will not be considered in the cost of the asset. Therefore, accordingly, the depreciation also will be reduced. Then what happens is his tax liability will increase. These are a little bit complicated or technical. So I am not going to discuss all these things here. Since the intention of this video is not this. So those who wanted to get more knowledge, they can refer to my playlist on PGBP for income tax classes of CA, CMA and CS students. One point to be noted here that this rupees 10,000 limit for cash is for one bill per day. You can pay more than 10,000 rupees in cash per day if there were more than one bills. But for each bill, the cash payment should not exceed 10,000 rupees. Now already we have discussed about the e-wallet or UPI transactions and all, and as I have explained, up to 50,000 rupees it is tax free. So above that amount it will be considered as a gift under income from other sources. Another section that we want to discuss here is actually section 80 GGC. So this is applicable to individuals, HUF means actually Hindu undivided family, then firms, partnership firms and all, then AOP, association of person, then body of individuals, BOI. But there should not be any government funding for these firms and all. Okay, and they will get 100% deduction if the payment is through account. This is dealing with donation to political parties. So donation to political parties will get 100% deductions. You might have heard about electoral bond and electoral trust and all. But I am not going to discuss these things in detail here. Just I will mention these things here. Okay. Now, if you have paid donations to political parties in cash, you will not get any deductions on this. So the businessman or other individual should be very much careful about this. In case you want deductions, wanted to claim the deductions, then you have to pay to political parties through allowed transaction modes only. Do not give cash to them and get the receipt. That is not going to help you. For companies, there is another section called 80GGB. Let us just summarize the cash transaction limits under different sections. As we discussed, section 269 SS is a loan deposit acceptance in cash cannot be more than 20,000. Okay, then the penalty can be the equal amount transacted in cash. Then another section is the 269T, that is for repayment in cash. That is also the same, equal amount transacted in cash will be the penalty and 20,000 rupees will be the limit. Then 40A3 we have discussed. This is regarding the maximum in amount that can be paid in cash for businessmen and the professionals and all. And if they do some expenses more than 10,000, that will be disallowed as an expense. So we have discussed about 443(1) also, subsection 1, that is for depreciation. Depreciation will not be allowed for fixed assets. Then another section we have discussed is at least 269 ST. This is for payment receipts for sale and goods or services in cash. That should not be more than 2 lakhs per day per event. Okay. So the penalty will be equal to transaction amount. Now let us discuss the occasions which will attract notices from Income Tax Department to you. So 20 such events are explained here. So when you get deposits of 10 lakhs per annum through your different accounts, then you may get a notice. Or when you use your credit card for purchasing more than 2 lakhs, that's another case. Then mutual fund investments more than 2 lakhs. Then actually, investment in securities, that means bonds and debentures and all, more than 5 lakhs a year. Then if you then property transactions, okay, if it exceeds more than 30 lakhs, then also notices may be you may get some notices from the Income Tax Department. Then if some discrepancies in the TDS, okay, TDS deductions, TDS claimed by you and the TDS records in the hands of the IT department, Income Tax Department. If some discrepancies are there, some differences are there, then they can send a notice to you. Then if you are not disclosing some fixed deposits, or you have wrong sections, you have claimed deductions under wrong sections, then if you are providing incomplete information or excess refund you are claiming, or you have not at all filed the income tax returns in time, then in case of some high value investment in the name of your spouse, your husband or wife, or your spouse, if you are doing some investment, high value investment, then also it may come to the notice of Income Tax Department. Then daily, maybe per day, more than 50,000 is deposited or withdrawn from your bank. That's another reason. And then your aggregate deposit and withdrawal together that exceeds 10 lakhs per year, then violation of that 269 ST rule. That means that receipt of 2 lakhs per day, maximum 2 lakhs per day per event. Then violation of section 269 SS, that is the receipt of loan or deposit more than 20,000. Then if there is some discrepancies in the ITR, these, if some faults, some mistakes, some kind of discrepancies are there, then if actually this kind of things does not match whatever you are given in your ITR, is not matching with the information provided by banks or financial institutions, then also you may get some notices. Banks and financial institutions, they have to show the high value transaction in their annual information report, that is the AAR, and the same is to be reported to Income Tax Department. And when they check it with your information, what you are given, both are not matching, then naturally some notices they will send to you. Then some high value transactions are there between the individuals and institutions. then if it is noted by income tax department, they can send a notice. Then deposits more than 10 lakhs for individuals, and the transactions, current account transaction more than 50 lakhs. Okay, all these kind of things can attract the attention of income tax department, and they may send notices to you. There are no specific heads in ITR to show these high value transactions, but if income from these transactions are not shown in your returns, you may get SMS and email alerts. You have to respond to these by logging into the income tax compliance portal in their site, and you may answer whatever questions are asked by them, and you have to give the details to this regarding these transactions. If these high value transactions are not reported properly, you may get a penalty of ₹500 per day, and this can be extended till you pay the fine. So this is imposed as per section 271 FA. It is better to respond as soon as possible for the notices you get from income tax department. If required, you can go to their office and talk to them in person. All these provisions are there to curb black money by encouraging digital transactions and transactions through bank, and actually this way the government can control the black money. If some payment is done in cash, nobody will know how much is paid, and actually there is no record on this. That is the reason this kind of sections are introduced in the Income Tax Act. Again, one problem is there only if it is accounted, then only that our government will get tax on this. Without that, there is no tax. No tax means actually government will have lesser fund for their activities. Okay. If you are a businessman or a person dealing with high value transaction amount, make sure that you are familiar with all these provisions. Otherwise, you may end up in some financial losses and maybe some legal complications and all. Okay. So all these provisions in the Income Tax Act, actually we are obliged to comply. We have to comply all these provisions so that government get more money as tax, and that can be utilized for the benefits of the society. So you are supposed to know all these provisions in the Income Tax Act. So as somebody said, the ignorance of law is not an excuse. Therefore, it is understood that you are familiar with all these kind of rules and regulations. Everything is available in the net now these days, so you can refer to all these sections. I have given the number, section number, everything I have given. You can Google it and find out the finer points and all, but all the points we cannot discuss here, that we have not discussed here. So be familiar with all these rules and be confident. Thank you.